everybody. Another week, another episode, keeping it rolling. Joining us for this episode, we have obviously myself, Mike, and we have a guest on today, Jeff Gaston.
Our good friend. Don't look so scared, Jeff.
Not scared at all.
And he's one of our EVPs, and he actually not only is over our ACA call center, but really our head of life and annuity as well. So anyways, so today you can imagine the topic we're going to be going through mostly is going to be life, annuity. There's a whole lot to kind of chop up and go through. Where do we want to start?
Let's start with Jeff's history, how you got into the business, because Jeff is a young buck. Jeff's done more in this industry already in his young age than most people. So Jeff, tell everybody like a 2-minute intro, how you got into the business, insurance at a young age, and like what your experience has been to this point.
And I guess how you arrived in this chair even too.
Yeah.
Right.
So out of college, I was looking for a job and worked for a company called American Income Life. Worked for them for about 2 months and figured out that I could do it on my own. And they were taking most of my commission. You were barely making 50% on a life sale.
Sorry, American Income Life people.
Exactly. And so I ventured out on my own, started an LLC, everything, kind of went through all the works, didn't really know what I was doing, went and partnered up with a couple brokerages, was mostly just selling life insurance, met my old business partner, just
How old are you?
referrals.
You guys?
I was 22 years old.
Yep.
Yeah.
So all of us that say, I wish I would have got into this business when I was in my early 20s, that was Jeff. He was smarter than us.
Yep.
Found the path earlier.
And then he put me onto residual income and renewals with Medicare, and I was immediately hooked. Started a company called Rocky Mountain Insurance. Worked and did that for about 6 to 7 years. Sold out on that to my old business partner. He now runs the company. We were an MGA for Medicare. We did life, annuity. We even did P&C. We did every type of insurance you could possibly think of. Learned the goods and bads of what products are. Still to this day, my favorite product is Medicare. Even with all the changes and everything, I really enjoy doing life and annuity, obviously, and ACA is really fascinating. It really became fascinating about 4 years ago. But we did everything above the sun and met Dan, how long, 3 years ago?
Yeah, sounds about right.
About 3 years ago, I met Dan because we live in the same city, and I'm on the city council there. And Dan was trying to get his garage done, and the city told him no. And he just randomly called me one day, and I was like, "Oh, that's a stupid rule." And he's like, "Yeah, well, I can't get anyone to run a city
I was trying to get some stuff.
something." Yeah.
I was trying to get some rezoning done.
Yeah. And met him, and I was like, "Oh, we got to get that fixed." I'm like, "That's a stupid rule." Didn't know anything about him or anything from it, and we just became friends from it.
For those of you listening, I've always been that way too. It was like, this doesn't make any sense. Like, this can't be right. And I usually just don't let it lie. I'll usually just go the umpteenth degree to just be like, this is stupid. This makes no, and yeah. Anyways.
Where there's a will, there's a way.
We got that worked out.
Exactly.
How much did he have to grease your pockets to get that rezoned for him? Is that why?
None, luckily, because I thought it was such a stupid deal. Just kidding. We never take this type of deal.
Maybe that's why Jeff's here today.
But that's literally how we met. And actually, when it came down to it, Jeff had a lot of experience when it came to, especially life and those other products we weren't familiar with. The one thing you didn't bring up, there's one product line that I'm assuming is your least favorite, and that was the P&C, I would guess.
Yes, P&C was probably the biggest business failure I've ever been involved in. Just too much client, you just having to work with them too much, having to hire staff. I honestly don't think I ever even turned a profit. Anyways, we had hundreds of thousands of dollars coming through, just all the work and everything that went through on it, didn't make a profit at all. And it sucks. It's a hard business to be in. I know a lot of agents that made a lot of money, but they also inherited books that are 20 years old. Getting into that line of business nowadays, I wouldn't advise anyone to do that. That was probably definitely our biggest failure. But we thought it was going to be great. So we had so many clients, and they were like, "Oh yeah, do you guys do auto and home?" So we were like, "Yeah, we'll add that."
Coming in hot, taking shots at the whole P&C industry.
It's just wrong industry to be in is P&C, especially if you're selling Medicare, ACA, or life. Don't try and do it on the side. I would definitely suggest if you want to add something, if you're selling Medicare, add ACA, some ancillary products, life or annuity onto it. But I definitely wouldn't venture into P&C whatsoever.
Yeah, so let's start talking life annuity. There's so much to get your arms around because we kind of at least on the distribution side, we kind of break up the products into different categories, right? Even though, life insurance can be anywhere from a very simple, easy contract or transaction to extremely complicated, depending on the product type. We, at least in our organization, we always break it up into anything that's term life. So in term, it could be 10-year, 20, 30-year term. Could be called mortgage protection, right? Could be called key man, buy-sell agreements. All that can be done under term. But then we also have like final expense, which we call a different product too. And then we even break down final expense into simplified issued, graded modified, fully underwritten. So we have all these different categories. So let's start with
term. That's my favorite.
Yeah, well, let's do it. And I think what we really want to be putting out, like the message, I think, of this episode is we want people listening to understand that it's not as complicated as maybe some agents think. It's not as daunting and overwhelming. It's a lot easier to actually offer it to your clients and to sell a product, and to take that application and get it through, I think is far easier now than it was 5-10 years ago. And so I think that's the overwhelming message that I want people to understand from this.
Yeah.
So let's start.
Well, that's one of the positives that actually came from COVID. It made the life insurance industry a lot easier, and AI really changed the industry as well. So term's my favorite life insurance product to sell because it's actually one of the better products to get approved quickly. So obviously IULs, whole life are very good for the right client, but term fits for everyone. Even if you have a major whole life policy, you should have a small term policy on the side because it's so cheap and you get such a good death benefit from it. But when people hear the term insurance, it's really mortgage protection insurance. Is actually just a term product. It's just a fancy name that goes with it. Keyman insurance is actually it's a term product unless you wanted to tie it to a whole life, but no one's going to tie a $15 million whole life product unless you're willing to fork out the money. There are certain clients that will do that, but most of the time it's always term insurance. And there's certain carriers that fit more with mortgage protection insurance or just basic insurance for
final expense.
Mm-hmm. Yeah. And so for people to I'm going to back up a little bit and dive a little deeper. So mortgage protection, when we're talking about a mortgage protection, it's all that is let's say this consumer, this prospect, they take out a mortgage on their home. Let's say their home is $1 million and they have a $600,000 mortgage. The whole premise being, what happens if, God forbid, you die and you're the breadwinner, and then you leave your dependents behind, a spouse or kids or whoever, and now not only is the breadwinner gone, but now you're getting evicted or kicked out of your home because you can't afford it. So the whole premise is you're going to buy this insurance policy, which is just a term policy, for a death benefit at least as high as the remaining mortgage balance or more, and that is what is protecting your family and allowing them to stay in the home if in the event you die, correct?
Yeah, yeah, it's 100% correct. So let's say you have 25 years left on your mortgage or 23 years left on your mortgage. You can actually buy a term product with exactly 23 years left on it, and let's say you owe $195,000, you can buy a term product exactly for $195,000, and you can buy it on you and your spouse.
Yep.
So 2 separate policies is usually the way they do it. So if the husband dies, it pays out the wife. If the wife dies, it pays out the husband, not a survivalship policy, because this might be something that if you sell that house, you might want to keep it after. That's usually the best bang for the buck. Corebridge, which used to be known as AIG, actually even has a product that changes every single year. It's not just your standard 10, 15, 20, 25, 30 year products. They have one that descends. So if you want a 17-year, if you needed a 13-year, you can actually buy to that exact product meant for mortgage protection.
Exactly. And I think most people don't have a plan like that in place financially. The majority of people do not. And it's actually as cheap as skipping eating out once a month. I mean, literally for most people, they're going to take the family down to Applebee's, Olive Garden, whatever that
Probably
is.
cheaper, yeah. Applebee's be expensive these days.
Okay, right. What is that song? That kind of fancy like Applebee's. Anyways,
that's Burger King. Plus Brian with the
anyways, but the point is that we all as people culturally spend on all these things, and yet here's a very basic thing that most people don't even have protection for, and God forbid, we don't want that to happen, but it does happen to people. And for sometimes $20, $30, $50, $70 a month, depending on how much the mortgage is and what their age is and everything, it's not a lot of money to at least cover and protect your loved ones. So that's the premise that I think we want to talk about.
How is that different from like the bank required protection insurance.
SBA, yeah, and then let's talk about that, which is also
Term product
like
as well,
If
yeah.
a bank goes out and issues out an SBA loan on a business, right, and they're saying, hey, we're going to loan out X dollars for whether it be collateralized with the property, because there's two different types of SBA loans. There's
So you have an SBA, you have a 7A, and then they have 504 loan. So a 504 has real estate attached to it. A 7A doesn't, and both of them will require life insurance, more than likely on a 504 because of with real estate, they're usually requiring it more than 7As, but it really just kind of depends on what the situation is. If there's multiple owners, different things like that through it. If you're a single owner, a lot of the time they do require some sort of life insurance on there because if you die, the bank or the SBA is out of the money, which is the government side, and they're seeming to be more and more requiring it lately.
They don't like to lose, do they?
No, absolutely not. So that's why they require it. And they force you to have a collateral assignment on it, so they own the policy for you. So let's say Mike goes out and builds a building for $2.5 million. They're going to require on a 504 loan a minimum 20 years. Usually they want at least 25 years on it. Let's say that he's a single owner on it. They'll make him get that policy. They'll it'll be technicality, will be key man insurance, but really he's just going in, buying a policy. More than likely we'd put you with Banner, one of our great partners here at Agent Boost. It's an easy drop ticket that you fill out. All I need is your last four of your social, your date of birth, your address, and your first and last name legally, and who you want to leave the money to. Because if the bank, after that $2.5 million, let's say you die halfway through and you only owe X amount, the rest of that money will go to whoever you designate as your beneficiary. They will only collect on the money that's owed to them on the loan. So, and a lot of the time, business owners figure out a way, I could maximize this, and then I'm going to go buy another property, but I already have this policy in place because right now I'm only 40 years old. I'm going to buy my next property at 48. It's just going to cost more. So a lot of the time, they'll up their policy and will buy it a lot bigger. And with life insurance now on these, back in the day, we used to have to do full medical exams.
Right.
Because of COVID, it changed a lot of things. They're able to get access to your MIB report, everything a lot quicker. A lot of these policies are instantly issued, and we're getting them issued in 5 minutes, sometimes just a couple of days.
Right. And let's talk about that really quick. Back in the day, I always talk about this, back in the good old days, when you had to go write a life insurance case, it was brutal to try to quote and try to figure out all these different companies, what's the right product, and then you get the application, you downloaded it. Like I used to do this back in the day. I wrote a couple life cases. You'd get a 15 to 30 page application depending on which carrier and which product, and you had to meticulously go through every single field, submit it, and then it was not uncommon for one or two or three of the fields to be incorrect or not done. You would get kicked out after sitting there for weeks at a time until somebody actually, human eyes, looked at the application, and then it came back to you. Then you were going back to the client again, then submitting it, and it used to be very, very hard. Nowadays, it's a lot easier, correct?
Oh, 100% easier.
So talk to people about whether it's, mortgage protection, term, quoting it, doing the applications, the enrollments.
Parameds.
Yeah, what is it?
Yeah, so let's do an example on a 30-year-old and a 55-year-old. So if you're 30 years old and your policy's under $3 million, they're more than likely not going to require a medical exam. Unless you have crazy MIB report and you've got like your insulin dependent, different things like that. You have MS, different health issues, major health issues. We're not talking like high cholesterol, high blood pressure, major things. Then they're going to ask for the medical exam. But you're still under 50 years old, so they're actually not going to do blood work under $2 million.
Cool.
With that. So,
and you're obviously able to tell agents when they call in and say, hey, here's the situation, here's what I got. Mm-hmm. You're able to immediately point them and say, this is the carrier and product to look at. Go ahead and run quotes or whatever, but I already know based on this situation, here's the product.
Yes, and it's gotten so simple that there's when you get into Agent Boost portal, you click on your quoting tool right on the left-hand side and it takes you right to it. It literally walks you through on, you don't even need me at some points. You're able to get your quote exactly where it is going to be. And if the underwriter changes it, you're like one rating off. It's not like in the olden days where you might quote them at a preferred rating and they're going to get table rated table 4. You look at the medication chart, it's so simple to do nowadays.
Yeah, and a lot of them are now using AI for that too, right?
Yes.
Where they have like their knockout, like their exclusion list, and they're using AI based on their meds to put them into like a rating or a classification.
Yeah, so I wrote a policy on myself like 4 months ago because I wanted to see the process and what it is. So I just did the drop ticket. So I put my first, last name, my date of birth, all that, address. Then it sends me an email. I click on the email. It takes about 8 minutes to do. It goes through and it's generating questions. It'll ask me, have I had any surgeries? Have I had anything removed from my body or anything like this in the last 3 to 5 years? Different questions like that, but it's based off of my own MIB report. So if I had medications, it'd be asking a follow-up onto it. I didn't have anything, so mine was a lot quicker. Right at the end, it says, congratulations, you've been approved. And it downloads my policy right then and there and says, would I like to pay the first year premium with my credit card or bank ETF? And right there, I have a policy down and issued.
It's
and
binded?
Binded everything through it. I pushed acceptance on it. It's all in the same email. Now let's say that I did have some meds and it's going to kick it. It'll say right at the end, hey, we just need some additional info. It'll take 3 to 5 days. They will take your doctor that's on file and they'll send them an APS report, which is the attending physician statement. And it'll say, this is the reason why he's taking these meds and these meds. As soon as they get that back, you're in the all clear. The reason for that is doctors are now using a lot of medications that are treated for certain illnesses for nothing. Like one that's popping up more and more common right now is people are taking a diabetic medication to lose weight.
Loss. Yep.
And they're like, you are 27 years old. Why are you taking this medication?
Yeah.
And normally at your age for that, you're going to be table rated for being a diabetic there. But the doctor says, well, they're actually doing it to lose weight. Okay, now you're moving into that standard category because now you're losing more than 10 pounds in a year. And they want to know why. So that's why that APS report is so important.
Okay, really cool. And how long does it take? We're like throwing out all kinds of little bombs in this podcast already. But how long does it take to do a drop ticket for most people? 5 to 10 minutes?
Oh, not even that, like 3 minutes. It is so simple and quick.
So for agents, why do people even need life insurance these days when there's GoFundMe?
That's a good point. GoFundMe's kind of changed the way it's working.
Just kidding. GoFundMe is not life insurance. I'm always amazed at
stirring the pot. Yeah.
But sometimes those GoFundMes, even the really big ones, they're only getting up to right around $1 million.
Yeah, I'm like
$1 million doesn't go very far nowadays.
Like man, for the cost of a couple Starbucks a month, you could have had really, really good term insurance, And
I mean, talking about GoFundMe's too, like I always feel bad too when you see those and you're like, we're trying to raise $50,000 for this poor family and to pay for funeral costs and medical bills and stuff like this. And I'm like, and then what? This is just a drop in the bucket. This $50K that you need to keep the lights on, so to speak, this family really needs $500,000 or more, not 50,000. And GoFundMe is not going to solve that.
Do you know any? I'm only bringing this up because I'm always amazed at how many people don't have basic term life insurance or something. Like I'm always. What are the statistics on it? Are they improving as far as coverage? Do you know? Or are people getting more coverage, or are they kind of just like
anecdotally? I'm going to throw this out, and I'm going to let Jeff answer. But anecdotally, I'm going to throw out that I think as a culture and a society, I think we're becoming less and less responsible.
I agree. That's why I'm asking.
I think that with the whole new generations too of like YOLO, like I'm just going to go, I've got $1.50 in my bank account. I'm going to go spend it on something. I have $10,000 in credit card debt, but I'm planning my next trip. I think with that just kind of being like the culture of our society, I think people are just less and less fiscally and emotionally responsible.
Most Americans under the age of 40 do not have life insurance.
Yeah, most.
Most don't even look to get life insurance till after the age of 40, as crazy as that is. And nowadays, it's even worse. Younger generation is not spending the money for it. There are small pockets of people, like I'll use the Acorns app, for example. It's a roundup to invest. It was really popular during COVID. They now have features on there. Okay, get a quick quote for life insurance. Companies like that are adding it in.
Which I think is smart because they're basically saying that money that we kind of forced you into a savings plan, take some of that money and convert that into like life insurance. But
they're not just actively shopping. They're not calling up Agent Boost and saying, hey, I want $2 million life insurance policy on me. I have 2 kids at home. Me and my wife are 27 years old. That's not happening. That's very, very rare.
Yeah, it's wild because maybe it was just the way that we were raised and like culturally inherited. Like when I was a kid, when I got married when I was 23, married kid, the number one and number 2 protections for my life that I thought I had to have was number 1, not life insurance. It was what?
Car insurance?
Think about our growing up. food storage.
Oh yeah.
Okay.
Oh yeah. Okay.
My number.
Okay, I see where you're going.
That's a Utah thing.
Yeah,
just so
Utah
everyone
thing
knows.
was like,
I see where you're going.
I was like raised that at some point I'm going to need a year's worth of food storage, or I'm a derelict father and parent and husband.
You gotta be
and that like at some point I'm going to eat out of a can for a long period of my life to sustain life.
You've been mentally preparing
Yes.
for Armageddon your
So
whole
the
life.
first,
Yes.
so seriously, the first big purchase I had when I was married, I bought like $2,000
Storage?
$2,000 worth of food storage from Daily Bread, a company, to protect my life for when the apocalypse happened. You know,
Did you hear it off of Glenn Beck or off of The Blaze? Or
Probably Fox
something?
News.
Oh, yeah.
actually, someone door to door bought it, and I'd wanted to get it, and I could barely afford it. My first extra $2,000. I remember how much it was for this food storage system, and I remember thinking it had a 20 or 25 year life thing, and I was like, whoa, I'll never get through this. And I still have it, and it's
in your basement,
and it's almost expired, and I got to throw that crap away and buy something else. But the second thing was life insurance, you know. Yep. And I bought life insurance for my wife and I've had life insurance ever since, as my whole journey of being entrepreneurial and being like, it's always been something that I've had and just known. And maybe it's because, you know, Dan and I lost friends tragically at a young age. And, so maybe that was more of a reality for us, a gut check. And I just think that it's amazing how many people don't have life. It's one of those products where classic insurance, you hope that you never use it, but you want to have it if it's there, you know.
Like, why would you not? I think it always starts
why
with the
would you
premise of like, hey, life insurance is great to have as like a CYA. It's a just in case, and you hope you never use it. But then there's other life insurance too that's more an investment vehicle and something and those are more complex products, obviously permanent insurance, but those are great investment vehicles too that we can talk about like in another episode, like very sophisticated investment strategies with certain types of policies. But we'll keep it for today. Just like let's talk about then even like final expense policies and moving into there. Like, why do we even, and the reason I say this is final expense is kind of broken out into its own little category, because usually with final expense, you'll have to stop me if I'm wrong anywhere, but usually the death benefits are anywhere from $5,000 to $50,000 in that range, correct? So it's just usually we say final expenses for people who didn't plan. Like they plan nothing in their life. They get to their 50s or 60s or 70s and they're closer to the end. They did not plan financially accordingly in their life. And really, usually those people just want to get that in place so that when they pass, they're not passing on a burden to their family, right?
Correct.
That's usually what we're talking about.
And final expense is mostly common sold when you're on Medicare.
Yep.
You know, you're on a fixed income, you're living off Social Security, and usually you're paycheck to paycheck. And, you know, funeral costs are expensive these days. Just a basic funeral, you're right around $10,000 right now.
And I think we write a lot. Obviously we have a lot of carriers in total life and annuity. How many carriers do we have that we contract
Over
with?
60.
So we have over 60, but with final expense, what we typically try to do also, and this is just me putting out here for this episode, we don't carry every single life carrier under the sun or represent them, because sometimes it doesn't make sense. We just need 2 or 3 really good competitive carriers that are A-rated for term products. We need a couple for, fully underwritten products. We need a few for those graded modified, and we need a couple of those guarantee issue. And it's like, you do not need to have 17 different carriers for a guarantee issue. 2 or 3 is great.
Yeah.
You know what I mean? So I think that's where we're at with.
Yeah, but what happens when you get a chargeback balance with one of those carriers and you need to just abandon ship and go find another one so you can still sell final expense without having to pay back their chargebacks?
How many applicants do we get in those situations, and we run their vector and we are not allowed to contract them?
Shout out to all you vector avoiders.
We
you
call
vector
that
hoppers.
the tote the note, like the cars, you know what I mean? Like the repo car lots. Same thing, Mike's kind of, making it a little bit fun. But yeah, we have agents that are selling final expense and, they're making commissions, and then they get 3 or 4 chargebacks to anywhere from $5,000 to $10,000 in chargebacks. And suddenly they're like, oh, I'm suddenly not going to sell AmAm anymore. I'm going to now go and sell, I would say Settler's Life, but they're out. I would say,
we're like, why do you want to sell that carrier? Oh, you've got chargeback balance. You're getting vectors.
And now you can't get appointed with any of the other carriers because they're all talking.
But
and
they
now
used
they
to
won't
not.
appoint you.
Yeah,
They
yeah.
used to not talk. But now if you don't have an appointment with them, that's why we get so many applicants like, hey, I'd love to come work for you guys. Oh, but I have $25,000 worth of vector charges.
You know, why don't you want a North American appointment? They're great and competitive in lots of products. Why don't you
They
want
won't appoint me.
protective? Oh, well, yeah, I have a $3,000 chargeback. Just handle your crap and be responsible and pay it off.
But to counter that, the reason why we like to go month to month is you will never have a chargeback with final expense here at Agent Boost. And we would always advise any agent to always go month to month. When that money hits your bank account, that's your money. No one's going to take it away from you.
Yeah.
That's the best way to do final expense, period.
So-
especially when you're doing graded, modified, guaranteed issue products. Those are more common to fall off in the first 6
Right.
months. Why would you want an advance that's going to take that money away from you?
So talk about those three categories, how we break it down into those three categories. What are they and why do we, who falls into that category and why are they broken out into those three categories?
Yeah,
Final
so
expense.
you'll have your standard policies that are with final expense, means that you're in good health. They're going to issue it at a flat
fully
rate.
underwritten.
Yep.
So meaning like you talk to somebody that's healthy and we know that they're healthy. So then we're going to say, hey, we're going to put you through underwriting because we know you're going to pass. And by doing that and undergoing the underwriting, you're going to get a better rate.
Well, for final expense, they're not even going to put you through labs or anything like that. They're all, it's called simplified issue because there's no labs, anything like that. They're pulling off your MIB report. Now, let's say that you're in decent health, you got a little bit of high blood pressure, some cholesterol, you're just going to get that normal rating. Now, let's say that you've been insulin dependent since you were 35 years old, everything else looks good. You're going to probably be either guaranteed issue or you're going to be in a graded category, depending on which carrier it is.
We say graded, they kind of like
Graded, you're about halfway in between in premium increase between there and guaranteed issue.
Yeah, they're
and guaranteed
basically-
issue is like another, I don't know, I'd say 50% on top of where a regular policy comes in on final expense.
Yeah, so for people to get a better understanding, what they're basically saying is we understand that you have more health issues, so we're going to charge a little bit higher of a premium because of your health stats. We're still going to issue the policy, but you're going to pay more because of your medical conditions or your background.
And we'll know that in 30 seconds because we have the software here at Agent Boost where when you're talking to your client on the phone, they're going to tell you every health condition they have or medications. We're going to type it in. It's going to pop up and it's going to be, Mutual of Omaha right here and they're going to be graded and this is going to be the exact price. These are your next three best options and it pops it right up in the software for you.
Perfect. And then if it's like, hey, we're beyond just a couple minor issues, you got to go to guarantee issue. And that's where premiums are typically double-ish.
And it really depends on what state, carrier, your age demographics. A lot of the time, AIG, which is Corbridge now, their product still says AIG though, so I don't want people
And we have one of those grandfathered AIG contracts too.
which is guaranteed issue, and the agent commissions are almost double for what everyone else is able to offer. And we offer 80% right across the board to all our agents. We don't change it depending on who you are. Everyone gets 80% commission with AIG. You find someone out there who gives that better to you, I will be shocked because they don't even offer that product to anyone anymore. Most people on a guaranteed issue product, they're making about 40%. That's a pretty good product. If you're getting 50, you're doing very well. And we're talking here your Gerbers, different stuff like that, your Great Westerns. They're paying a lot less money. AIG getting 80% for an agent commission.
For a GI.
And it's a good product for the client. It's usually a lot cheaper. So now with guaranteed issue though, if your client dies in that first 2 years, they usually just get back their premium refunded to them or 125% of what their premium is.
So it
doesn't pay out the full death benefit.
Let's talk free look and ROP.
Okay.
Just explain that to people.
So you have your free look period where they're looking, you're looking at your product. So I'm going to use guaranteed issue for your example here. You have your 2 years. Let's say that I sold this policy to Mike's mom. I explained to her, hey, if your mom dies within these first 2 years, you are just going to get refunded the premium. Depending on the product, you're going to get an extra 25% return to you.
Return of
on
premium.
top of it. Exactly.
And there are products out there where you can put a return of premium rider on and pay a little
and
extra.
we'll get to that one right after this portion of it. But a lot of people think I just got that guaranteed issue and they die, I'm going to get that full death benefit. Doesn't work that way. Now, here's the other bad part. The agent's commission, a lot of the time you are going to get charged back on that. So make sure when you're writing a guaranteed issue, you're trying to not get them on guaranteed issue unless you absolutely have to. People really need to understand the product before you sell it to your clients in that sense. Now, return a premium. Now, that's one of my favorite products that you can do in term. It costs a lot more. It's sometimes double or 3 times the amount, but at the end of the 20 years of a term product, you will get all your money back plus 2 to 3 times of what you paid into it. And the nice part about that, you're having to pay a lot more during that 20-year period, but It's almost an investment
for
product.
savings product.
Yes, because if you die during that period, you're going to be paid out. At the end, you're going to get all your money back plus interest in a way off of it. It's like it's an awesome product. There's only a couple carriers that will still even offer it because they're just not profitable.
You're not going to lose.
People are living.
You can't lose though. Like you can't lose. Either you're going to get all your money back, then some, or you're going to die, and your beneficiaries are going to get a huge death benefit. So you can't lose.
Yeah, return of premiums.
You might have lost a little bit if you died, but somebody won.
Yeah,
from an investment perspective.
Yeah.
Yes. Yeah. I mean, then you got your cash values, all that. And obviously there's cash value added in on any final expense policy as a whole life policy. It's just another kind of like mortgage protection. It's just another fancy name with it. That your client will grow with cash value with it. It's not much on final expense because it's off of how much premium you're paying into it. But when you're writing like an IUL or one of these more advanced policies at a younger age, your cash value is really nice there towards the end, which is a little bit different than your return of premium option.
So before we run out of time on this particular episode, let's talk some of those permanent insurance. Like we don't have to get into the weeds, like into the details, but let's talk about more of those. What are some of those investment products that
like
are
a
out
Kaizen
there
type?
On the more sophisticated end, when we're talking like bank-owned life insurance, permanent GULs, IULs, overfunding, some of those different strategies. Can you talk for a couple of minutes about what's the difference between an IUL and a GUL and just straight up whole life? What are some of the benefits of doing it, the tax advantages to some of it, and just talk about some of those more sophisticated life products?
Yeah, so we'll start with GUL and an IUL. The difference between is guaranteed universal life and index universal life.
I heard those are all a scam, Jeff.
No, not
Dave
at all.
Ramsey and what's her face, Susie Orman said those are bad ideas.
They said to buy term and invest the rest.
They said to eat beans and rice and beans.
Yeah, they give some interesting advice.
Yeah,
but they've sure saved a lot of people who need to have a structure like that. I get where they're coming from with it, but if you're going to do a GUL, for example, that's for someone you're right on the border of being on final expense from term. You're right in that middle age between 55 and 65. That's where I like that product. Obviously, you can buy it at any age.
But with the GUL, isn't it also renewable up to 105 or longer?
Yeah, you can put it up to 120 years. So you can do whatever. We always advise people to at
I'm
least
living.
do 105 years old on it. The reason for that is if you live past that amount, it doesn't pay out.
And you can't do that with term, usually.
Correct. Yeah, it's a contract. So you're doing 30, 35 years. We can even do 40-year term products with Banner, for example. You're able to go all the way up there. But a GUL, you're right in between term product being a younger age or going into final expense. And you're looking for like $100,000 guaranteed universal life product. It's going to be a little bit cheaper than doing a whole life product that's growing with cash value because a GUL does not have any cash value. It is a set amount. When you die, you'll get paid $100,000 or $1 million or whatever amount you decide that you're going to do. An IUL is more of an investment type product with life insurance because you can attach so many different. We could probably do 2 podcast episodes just on IULs
and long-term care planning and everything else,
and riders and different stuff that you can do into it. But the short version of it is a lot of the time with an IUL you're attaching it with a rider or something to it with the S&P 500, or you're putting a smaller death benefit and you're trying to grow with cash value. Now, with the cash value, what that is money that grows the longer your policy is in effect off of your premiums. Now, you can take that money out, sometimes borrow it at a small interest rate. Sometimes you can borrow that money with no interest rate, depending on how you build up your policy and structure it. And it becomes a very powerful tool, especially in the now age where people can't qualify for homes. Mm-hmm. They're loading up IULs, whole life policies. They're taking cash value out of it to buy investments, different things like that. Essentially, you are your own bank in these situations.
Infinite banking.
Mm-hmm. And that's kind of the hot buzzword that they've used in the industry, right?
Yeah.
Infinite banking. But it is true in the whole sense is even from a more of a very vanilla strategy is grow that cash value in. And then when you're retired, you can borrow those funds from it and live on it. And, whatever's left that you don't use is still there for a death benefit, but you can use that as your whole standard of living and basically take that all tax-free.
Yeah.
Right.
And the nice part about life insurance, when you die, that money is 100% tax-free.
Yep.
The IRS is not going to come at it. It's right in the tax code. And that's why a lot of people, a lot of policies I sold right when I got in the industry were up in Idaho. These apple farmers, different farmers, they're buying $5 million whole life policies because when they die, they don't want to leave the inheritance to their kids. They want that money inheritance to come through life insurance so they can keep that farm alive.
Yeah.
They don't want to pass things over and have to pay taxes on it. yes, their premiums are massive. Those deals sometimes, they're taking 3 months to get approved. But
you cried yourself to sleep when you got paid that commission, right?
Yes, but the commission was
wiping his tears
unreal.
with $100 bills.
Let's just say you could buy a truck with cash with that commission. It is unreal. But you will run into those situations once you understand how to do the product, talking to the right people. Now, these people aren't rich that you're selling this product to, but they have the money for it because that's what the farm runs off of.
Yeah. So I think we're coming at close to an hour here, but what I've noticed with agents and selling life insurance policies is they just don't ask or they don't talk about them, right? Like when you're already and we've always practiced basically like a health to wealth type strategy. When you help people with their health, when you help people with their life insurance, their health insurance, you build that relationship of trust. You've already helped them there. It's a foot in the door to be like, guess what? I also do this, and what are you doing for life or these investment products?
And I'm going to segue into that too. These agents you already have to talk to people about their money, because even if you're doing Medicare or ACA, guess what? If you're selling ACA, you're asking about how much their annual income is and X and Y and Z and their dependents, and do you have children, so it's easy to talk to them about life insurance too, because you're already helping them with that need, and you're already talking about their financial household income. And same with Medicare, you're trying to determine, do you have IRMA? Do you have an income-related monthly adjustment amount or whatever? So you're already talking dollars.
Like, you're getting a top IRMA.
Yeah, well,
what are you doing with all that extra money?
Right. I mean, you're already talking dollars and cents anyway, so it's pretty. Now, granted, yeah, I know there's rules, cool down period.
Yeah, we're not saying sell them at the same time, everyone.
Don't blow the whistle on me and say, Dan said on his podcast to sell life insurance with Medicare. False.
No,
I did not.
Hey, it's AEP right now. You should be calling your clients, making sure everything is good with their policy. And when you're on the call, hey, what are you doing? What's your plan for when you pass away?
Yeah.
Do you have final expense? That is a product that I have in my toolbox for you. If that's something that you need, I'm happy to come out and discuss it with you. You're already talking to them. You might as well ask them about it. As well as ancillary products, different things with it. They're already your client.
And we all know the best way
for
retention on all of them is to bundle, right? The more products they have with you, the more products
they're never going to leave you.
them.
If you're doing everything for them, that client isn't going to leave you. And that'll help protect your Medicare book, your ACA book, if more products that you're putting in with them.
And as we've talked about in prior podcasts, when people are trying to figure out their money and manage their money in this industry while they build residuals, some of those other ticket life insurance policies that are going to pay out quicker and be a lump sum of cash is the survival mechanism to get people through to more residual days,
I equate it. We talk football a lot in the office. Everybody knows that. Like, the dink and dunk strategy, where it's like, I'm going to run this pass to the flat. I'm going to do a screen pass. I'm going to do a dump off. Then, as soon as the safeties come down, I'm going over the top. It's kind of like the same thing when it comes to this, where you're selling these little ACA policies or Medicare, and then you got like a home run life insurance every once in a while.
Oh, yeah. Even just putting on your business card. My old business, we would put at the bottom Medicare, auto and home, unfortunately, and life. And
if you could go back in time, you'd scratch that.
I would get a call from someone 4 years ago. I hadn't talked to that client. Hey, on the bottom of your magnet on my fridge says life insurance. I'm looking at that. Can you run me some quotes? Or, hey, unfortunately, can you give me a home quote? But if you just put something small like that on there, you will have your clients reach out to you, because they're like, oh, my insurance agent already does all of those things. So, just adding small little things and letting your clients know what you have to offer, you will get free referrals off of it.
Ask for the business.
Mm-hmm. Yeah. Ask. That was my point. Open your mouth.
It's not that hard. Like I tell everybody, it's just like, look, the McDonald's, the Chick-fil-A workers, the anywhere. It's, would you like to make that a combo? Would you like that upsize for only X amount more? Or you go to a drive-through, would you like to add a cookie to that for 50 cents? By asking, they sell so much more volume just by asking the question.
And by people on ACA, when you're helping their families and they're young, and you might have, those child policies, the Gerbers, the term policies that are going to be super cheap. I mean, you can get a few $100,000 worth of life insurance when you're young for an embarrassingly low amount of money, where it was like, man, if something were to happen with you and you could have like financially set your family up for freaking $30 a month, but you just didn't make that a priority. That's brutal.
I'm going to even throw this one out here before we wrap, because I always have these wonderful ideas, and I'm always trying to spread them to agents and saying, go implement, go do. And one of them was like even like the Gerber type grow up plans, like where you have grandma and grandpa trying to gift something for kids this year. So we've even done campaigns, and I'm telling all of you listening, if you have all these clients, let's say you have a block of business, there are a lot of people who are at retired age who have extra assets, extra income, and they want to buy something meaningful for their grandkids, but they're like, oh, what do I get them? Another toy that they're going to throw away or something for Christmas? You can run a campaign even to say, buy your grandkids life insurance and start them off and start teaching them these principles. And I guarantee you, if you go to your book of business to hundreds or thousands of clients and say, hey, do you have an idea for your grandkids for Christmas this year? Have you ever thought about this? You will get your clients buying those type of plans from you as well. And 'tis the season. It's almost November. Go run a campaign to some of your clients, and you can start offering some of those childhood life insurance plans.
Yeah, and their whole life policies too. If you're under 17 years old,
and they convert too.
You're 0 to 17. Mutual of Omaha's got a great product. You're looking like $4 a month, if that. For like a $20,000 death benefit, they're already approved for it. You're instantly almost issued on. I think there's 2 health questions. One of them's like, is the child currently hospitalized? I think is one of them. The other one was something else to do with like a heart. Those are the 2.
Yeah,
and it's instantly issued. Yes, it's like terminally ill. It is the shortest application you're going to do to get something approved, and it's a whole life product. It's like, hey, I'm buying you stupid candy canes and stocking that the kid's never going to use because they've got 100 others. Buy a child policy.
Yeah. Well, it's just an idea. There's
lots of ideas, lots of ways to make money in this biz.
Correct.
It's too easy to make money in the business.
It is. And so I guess as a sign off or a wrap up, just want to kind of give Jeff a great, endorsement. You've done a wonderful job with our agents, our distribution. When agents need quotes, they need help understanding a product, they need training. Hey, walk me through this. Where do I go to do a drop ticket? How do I quote on your different apps? Where do I put in the drugs for the knockout list? How do I do this? You've been really good working with all of our agents and other staff members. And I know you've even been available late at night, early in the morning, all hours, just trying to help agents get their cases through.
So if your organization doesn't have a Jeff, give us a call.
It's hard to find. To find. So anyways, thanks for coming on, man.
Yeah, absolutely.